We make a choice. I mean, we don't invest in everything. At that point in time, in our investment window, we had other investments. We had Pinterest, we had Spotify. See, in general, we invest about 1 or 2 years before an IPO that we expect, before they get rich in valuation. So this was very expensive at that time, and it still is expensive today. So I think we made the right choice. And we had other opportunities, primary and secondary. Like I said, Pinterest, Spotify, DraftKings, and DocuSign, and Lyft.
Lyft, which is $10 still below its IPO price.
For the IPO investors, but we came in much earlier, so we're fine. And so we're doing very well in Lyft.
Let's keep going on Slack for a moment, Santosh, if we can. A lot of people wondering how many more companies and corporate customers they can sign up. Are you optimistic that this can continue to grow as fast as it has recently?
No, that is our big risk factor, and that we factored that when we did the investment analysis. Freemium models are good. They look good, but it's not easy converting the free users to paid users. We saw that with Dropbox. We did not invest in Dropbox either for the same reason. So they're not easy to do. Plus, Slack has tremendous competition. You have Microsoft, you have Google, you have Amazon wanted to buy them as well. So you have these big guys right behind them. They're not going to wait around on the sidelines while these guys take market share. So they are going to bundle services, compete on price, compete on features. So there is competition. It's not going to be easy. Yes, it's a great product. We use it also, but it's not mission critical. Mission critical communication is still email, and I think that'll continue for a while.
I was wondering what they'll need to do to show customers that it's a productivity enhancer, because it doesn't seem as if there's a lot of companies that are eager to spend more on anything that looks like email necessarily.
Right. Yeah, it's going to take a lot of conviction. I think the CEO said in one of the forums that it's going to take at least 7 years to convert people from email to Slack. So I think that's the time. It takes a long time. People are used to emails. It works. So it almost feels like a solution for a problem that doesn't exist. So it's one of those situations. So it's a good product, great product for maybe new companies coming into market who can start from ground up. They can go into Slack. But well-entrenched companies, legacy companies are fine with email, so it's not going to be easy to replace
I mean,
that.
you said it was expensive, but if you look at some of these other enterprise software companies, CrowdStrike, and I don't know, what are some of the other ones? Zoom have come out. I mean, relative to those, it doesn't look expensive.
Yeah, but it is expensive overall in terms of their revenue. And see, right now what you have is a perfect setup. You have the macro market doing very well. You have a good tailwind behind them. These companies are growing their top lines very well, but the profitability is big issue still. So I think at this point, getting these big multiples is understandable with all this momentum behind them. But the dust is going to settle. They're going to come back quite a bit, and I would be wary of that. And even this Slack, I expect it to pull back a little bit, quite a bit actually, come back to, in the 10 to 15 billion valuation. That was our valuation, a fair valuation for this company. So I think that's where we think it'll settle.
I guess Lyft really stands out relative to the successful IPOs and post-IPO share price performances of the likes of Slack and Beyond Meat and CrowdStrike and Zoom. Really stands out as failing. Are you disappointed with how it's done?
No, I think Lyft was a long-term story for us. We think transportation as a service is here to stay. It's disruptive. It's going to be transformational. So it's going to take some time to play out. And the market is set up nicely. It's a duopoly. Uber and Lyft, they're going to do fine. Plus, Lyft has a nice strategy, defined strategy. I think the battle for ride-sharing is going to be won or lost in ride-sharing in North America, and Lyft is very well positioned in North America. So later on, we'll have Uber, the ancillary businesses take off.
Why do you think Wall Street doesn't get that?
I'm sorry?
Why do you think Wall Street doesn't get that?
Well, I think they'll get it. At this point, there's a lot of cross currents going on. There's a lot of negative feeling, the profitability and all that. I think at some point, people will realize that these two companies are here to stay and they will do well.